Good morning, ladies and gentlemen. It's 6th of February 2025, and today the weekly expiry of week 1 has taken place for February. We made a decent profit of 0.9% plus this week, which is more than double than our average weekly profits, and more importantly, it was despite the budget, a gap down, and thereafter a gap up, and the largest green candle on Tuesdays which we have seen in the recent times, and that too with the most basic of all the strategies, the FAR OTM short strangle. In the second half of this video, I'll share all my trades and the day-wise adjustments. But today, I will also share my profit not only in terms of percentage, but also in rupees. So in the month of January, since I started going live on my Telegram channel, the profit was 5.4 lakhs. And this week, I earned 2.16 lakhs. Usually, I tell these things in terms of percentage, but one of my Telegram channel member raised a pretty pertinent question. Well, he's working in an IT firm and his capital is around 8 lakhs. He's quite young, so he made around 16,000 profit for January, and he is not motivated enough, as 16,000 is a small amount, and to reach a substantial capital of 50 lakhs or 1 crore, it will take him many years. So the question here is whether Nifty Strangle 2.0 or option selling strategies as such, is it only for the people with large capital, or say a housewife or a small trader should also follow it? It's a really important question. I'll not give you some sermons here. I will give simple practical pointers. Now, 2% per month equals 24% per year. Hopefully, you have also bought government bonds with your capital and then pledged it for the option trading, which will give you around 6 to 7% of additional return per year. So in total, you are targeting around 30 to 31% per year. Now, you go outside and inquire from a normal businessman who is, giving 24/7 in his business, and ask him how much does he earn. To him, 30% would be a very good return on investment. Now, let's be honest. 2% per month is promised. Is it promised each month? No, not at all. In fact, it is very much on the higher side. And personally, if I earn 1% per month with the reasonable safety of my capital, I'm happy. But on an average, I do earn around 1.5% of my capital each month. Can I target more? Yes, I can, but not without risking my capital. And to me, safety of my capital is of the most vital importance. Now, how much you value your capital is the hallmark difference whether you are approaching your trading as a thrilling gamble or a sustainable business, or side business for that matter. When one starts in the stock market, we all had our moments wherein we dump a few lakhs, and whether we lose it or not, it doesn't matter. We win big, we share our P&L screenshots on the social media, boast ourselves in front of our friends, and then when we get hit big, we curse the stock market and advise others that stock market is a satta bazaar. But if one persists and continue batting on this pitch, it is like a marathon, not a sprint. It is then one realizes that there is scope for normal traders like us. And once that seriousness comes, we start respecting our capital. We start treating trading with respect as a business. If you have reached this video, you are fortunate, as we didn't get this sort of gyan before wasting a lot of years and money. So, what about inflation? Somebody may ask. An excellent aspect to consider. So, if you are not putting your money in stock market and you are putting it in FD and earning around say 6 to 7%, and yearly inflation is also around 6 to 7%, actually you are earning zero returns, right? Other options, mutual fund, unless you are very lucky, you will earn around 12% or less. After reducing the inflation of 6 to 7%, you are effectively earning 5 to 6% only. Now ask yourself, will that help you to reach your target capital earlier in your life? See, inflation and taxes are applicable to all form of investments, and the truth is we can't escape them. Other good option is to invest in shares, good stocks for long term, but develop your skill set for it. Don't go for MTF. Choose stocks based on their intrinsic values and do your fundamental research, and also rotate your portfolio from time to time. Thereafter, you can use covered calls or selling puts to accumulate more of those stocks, more of those shares. And even thereafter, you can also pledge those shares and stocks for margin, or additional margin, to earn extra by FAR OTM option selling. Personally, I find FAR OTM conservative option selling much easier than all of this combined, as I feel I'm in control of my decisions and my outcomes are based on my decisions. And each week and each month, as I see my profits, there is no greater feeling than that. Yes, you will agree with that. So, coming to the trades for this week. So on Friday we haven't taken any trade as such, because obviously next day was budget. On the budget day, that was Saturday, what happened was very simple. We had asked the conservative traders to stay away and join only on Tuesday after the Monday follow-up move had played out. We had taken a very simple strangle of our OTM 25,000 C and 21,500 P, as our only target was to cash on the option decay which was expected. So roughly around this time, by around 220 or so, there was enough option decay in the market, and we wanted to close in the strangle a bit, just a little bit, so that we can, in case there is a follow-up movement on Monday, we can actually take care of that. So we had asked the strangle to be close to 24,700 and 21,900 P. Now, even these straddles had worked excellent on the budget day, for obvious reasons. But the fact is that in case there would have been a movement, the story could have been different. So doesn't matter. We will stick to our strategy as per that. And what had happened thereafter was the rationale of keeping it for Monday was that on Tuesdays we generally keep a gap of 900 on the downside and 675 on the upside. So this was what our security levels or safety levels was there for the Monday. In case the market moves beyond those levels or if we feel threatened, then only we are going to change our positions. But by the end of the day, we had accrued good about 0.4% of the profit on the budget day, and then came the follow-up day on Monday, and it was quite volatile. The gift nifty in the morning was indicated around 162 points gap down, and as such we had our push positions. There was adequate cushion with us, so we didn't make any adjustment at 925, which we usually do. By the end of the day, we have seen that market opened gap down and thereafter made a V-shaped recovery, and market was taking support at 20 EMA on the daily chart, daily time frame. That was pretty obvious. However, going forward, by this day, the profit has also improved. The MTM profit had gone up to 0.5%, so that was really nice. And thereafter came the Tuesday, and it was quite a surprise package for everybody. So on Tuesday, what has happened was we reverted back to the normal trading. So Tuesday, as we keep a gap of 900 on the downside and 675 on the upside. So this was the straddle we had taken, and the adjustment points, which for every day we kept at around 300 points on the downside and 225 points on the upside, are as indicated by those dotted lines. Now, market did move quite a bit, and it was very close to our upper trigger, and in fact the VIX has dropped quite a bit by the end of the day, 2%. So we were in quite a healthy situation as far as our MTM profit was concerned. So as the payoff diagram was getting a bit skewed, we thought that it is good to balance it right now rather than taking it overnight in case of a gap up. So by around end of the market, we had adjusted the position on the higher side. We took the strangle at 24,500C and 22,900P. The old positions were obviously closed. So by the end of the day, again on this particular day, we had accrued a profit of around 0.7%. And this is how it looked like on the chart. No adjustment points because it was already market closing was there. So we were planning the adjustment points, seeing the market how it opens up on the next day. So coming to Wednesday, we had market opened around 23,800, so not much, but around 50 points gap up, and so we were keeping the levels. There was no further adjustment was required, and thereafter we gave out the adjustment points, which was again around 225 points up and 300 points down. So that held on well for Wednesday, as market didn't move much on the Wednesday as such. And by the end of the day, yes, we were around 0.7% of profit, nearly 0.7. That is very good. And another important point, or the pointer, was the ATM straddle premium at the end of Wednesday. Towards the Wednesday closing, it was around 145. So like if you remember in the last video, in the last week, we had seen that this ATM straddle premium, which is quite a good indicator of the volatility or the expected volatility in the market. Last week it was around 300 on Wednesday closing. This week it was at the normal level of 145. So there was not a big movement that was expected on Thursday. And by this time, the MTM profit had improved to 0.8%. And so, as we do on Thursday, we decided to adjust our position at the market opening itself because of this new problem of ELM or extra margin which is required to be paid. So, coming on to Thursday now. Okay, so for this day, what we did was we took the strangle at 24,200C and 23,200P. Those who have seen the earlier videos are aware that we take the strangle at around 400 points on the higher side and around 550 points on the lower side. The adjustment points are 24,000 and 22,450. This was around the midpoints from the strangle strike prices. And moving ahead, nothing major happened today except around 9:35 or so. We did see a spike in the ATM straddle. So however, it was not much, 145, which quickly dropped down and came back to the normal level, so which indicated that probably there is going to be a consolidation, and that is what mostly happened today. Market made a low of around 23,550, but closed at around 23,600 levels, and none of our trigger points were touched. So in the end, we made a decent profit of around 0.9% for the week. So that was mostly what this week was actually for us. And finally, in the nutshell, I can say that yes, it was a good profit for an eventful week like this. And for the first part of the video, for the small traders, I must say that there is no trader is big or small. If you value your capital, you are all equal. What is important is that you should respect your capital and don't play gamble with it. My advice to all the new traders or people with small capital is start deploying your money in a conservative strategy, which is going to last for a long time. And finally, if you like the video and if you find some sort of a substance in these videos, do consider liking, sharing and subscribing, and especially try and share if somebody is making losses in the market and if they can turn around. And do consider joining our Telegram community. The link is in the description. So that's all for the week. Thank you. Thanks a lot.